So we have ended with one more positive week. I mean, at the end of the day, although the overall market has been flat, but at the end of the day, the last trading session of the first week of CY 2023 was indeed very positive, where all the indices has moved more than 2%. But the question is this enough? And that's what we are going to discuss in this weekly session of USA market report, and we are going to check out about the things which has happened and what will probably happen in this series of, or in this session rather, of USA weekly market report series. So let us see what lies ahead as far as the important events. Then we are going to analyze the chart and what has happened as far as the price action is concerned. So the first news is obviously stocks staged first big rally of 2023 as hope grows that inflation will ease. So that is something which is yet to be seen. Apart from that, I don't want to go into, geopolitical things. Okay, let's stick to the stock market. And BioNTech says it will start cancer vaccine trials in UK from September. So keep your eye on this particular stock and the recent developments which has been happening. McDonald's plans reorganization, job cuts as it accelerates restaurant openings. So for the perspective of jobs, this is different thing, but as far as the organization is concerned, you better look at these kind of stocks, because now it is not only about MACD, but most of the companies, or most of the big companies, are indeed making huge amount of job cuts and they are reorganizing themselves. So what has happened from 2020 to 2021-22 has indeed changed from in calendar year 2022 onwards, and there has been some shift where the human resource reallocation has been realigned, and realigned very quickly. Apart from that, let us see. I don't think that we will get lots of news, because the market is, or the participants are not yet ready to participate. So let this week pass by, and after 10th of January you will see some active participation into the stock market, because the holiday seasons are going on. Apart from that, Eurozone inflation slides to 9.2 as energy prices surge cools, but I think we require couple of months for that, because let the March pass away. Okay, so we have 2 more months where most of the countries, and majorly in west zone, you will see lots of cold waves and something like that. So let 2 or 3 months pass by, then we can take any decision on that. So this is one of it. Apart from that, Shell to take 2 billion 4-quarter tax hit after, okay, this is company specific. And December's job report fuel optimism that economy could still pull off a soft landing. So let the economist decide all these things. We will be data dependent, and we will see how data is panning out. And I think this is most of it. As I told you, we don't find major news because market participants are not yet active completely. So let's go to the market thing and let us see. And let me show you one very important data. I think this is the time to show it. And US PMI data, PMI manufacturing index. So you will definitely get an info about how things are going and what's actually happening. So you can see the US PMI is very near or in between trading. The latest data was in between 46 and 47. So this is, see, whenever the actual is 46.2. So understand one thing: when PMI falls below 53, it simply means, what it simply means is you will definitely face recession. So 50 is the mark. Above 50 it's good, economy is fine, but below 50 you will definitely hit by recession. That's something which we need to understand. And the recent data is showing that last one was 46.2. Okay, previous 47.7 and the latest one as of January 3rd 2023 is 46.2. So there will be a recession. Whether it will be a hard landing or soft landing, let the economists decide. Okay, a recession which is very clear in front of you. So let's go back to the data, and all the major indices were in positive, closed in positive. Then I've been talking about gold, and I have already talked about the long-term chart of gold. So please go and check my previous video of USA weekly market report. I specifically talked about gold. Oil has been very steady and trading in between 70 and 80. So this is a fine zone. Okay, if oil continues to trade in between 70 and $80, I think that would be fine. The positive thing is the VIX has fallen 5.92% or 6%. So the VIX has fallen. This is a good sign. Apart from that, uh, and this is something which I have been telling for the last couple of months, that the bond yields are indicating a recession. Okay, and there is another thing that is going on in the market, that most of the people are now saying recession, so the recession won't come. So another fact is, it never happened in the history where each and every body talked about the recession. So when everybody can't go wrong, okay, not everyone will go wrong, because it's not like somebody is randomly saying something. So if things has to happen, it will happen. What will be the degree of that event? That is something that is yet to be seen. But the bond index has been, the bond yields has been indicating this thing, that the short-term uncertainty is high, and that's why the yield for 1 month, 2 month, and 6 month, or even 1 year is comparatively more than the 10-year or 30-year yield. Okay, so this is something which is very visible, very much visible in front of you, which means in the near term, the investors are feeling uncertainty, and that's why they are demanding more interest rates. So this is the logic behind the yields. And you have USD or US dollar index, which has been falling, I mean, from 104, 105 to 103.9. So it has fallen. Now understand one thing. Okay, now understand one thing, that right now we cannot correlate US dollar index fall versus stock market rise. Okay, that is there, but sometimes you will see both dollar index and equity indices start falling. That is also a reality. So sometimes things will not match. Okay, it's not like when one leg is going, you can't walk with one leg. That's a reality. But sometimes we place our one leg in the front, it does not mean we will start walking. So things will not match simultaneously. I mean, similarly, this is the situation where you will see each and everything will start falling, because market will adjust itself. Okay, it's not only about the dollar index fall, because now the hiked rates will impact the financial reports of the companies. That will happen because there will be a lag impact. What has happened in the calendar year 2022 will make its impact in 2023. Okay, that is about to happen, or that will start. Now let's start analyzing the indices, and let us see what will happen going forward. Now this is the 5-minute chart of S&P 500. Let's start with equity indices, and what you can see in the last couple of days, even with the rise of 2.5%, you can still see that the overall trend is range bound. It is nothing very specific to talk about that trend has changed or something has happened. It is very much range bound. And if you are looking at the, or let me show you the, let us go to the minute chart or something. So what we can see over here, if you are looking at the chart, so let me this is the 1 hour chart, from 5-minute chart to 1 hour chart. And let me remove all this line, and let me show you how the trend, or what the trend is saying. Okay, so what do we have here? So if you are looking at S&P 500, so this is the SPX chart, and what you can see is something like this. Okay, this is how the SPX is moving. Now I mean, you need not to take any position, just observe and visualize whether this is a positive move, and if it is indeed the positive Friday, what will be the impact? Will it change the trend? Because if you are looking at the upside, it is in between. I mean, you will definitely face resistance in between 4000 and 4063. This will be your resistance zone. And if you are looking at the downside, you have a big range that is still there, and it is in between 3300 and 3400. So you will decide that whether this up move will make any impact in the overall trend. That is something to be looked at. So if you are looking at this trend, this is simply indicating that the next move or the move has already started. This is an upside, this is a downside, this is an upside, and probably this is the downside. Okay, so the overall trend is indicating a downside, not an upside. Although you have seen some bounce back in the last trading session, but whether it will sustain or not, that's a big question. And if the trend is saying that the S&P 500 will move higher, then we require a breakout like this above this line. So we will definitely require a breakout. Okay, so that is something which we need to look at. Now talking about the Dow Jones, and I think you will get the similar kind of flavor. Maybe the levels will be different, but yes. So as far as Dow Jones is concerned, it is much more stable. That's what you can see, or that's what at least I can say. But it's not like I'm going to make some big announcement and I will look at the trend in a much positive way. Right now we will just focus on range. Okay, so there is a complete deflection between S&P Dow Jones and Nasdaq, and that's what is impacting the S&P 500. One is going lower and one is just trying to make itself resilient. So the Dow Jones is much more stable than Nasdaq. That is a known fact. So but at the end of the day, never say never and don't take unnecessary risks. So if you are looking at Dow Jones, this is the range I think that will work out for you. So on the downside you have 32,895 and 32,590, and on the upside we have 34,460, 437 or 34,650, 637 and 650. This will be the range that we are going to look at as far as the overall range is concerned. So focus on this. Maybe you don't see much downside because the Dow Jones is not at all indicating something like this, but if you are looking at Nasdaq or SPX, more specifically Nasdaq, the trend will be completely different. Okay, so this is Dow Jones, and now let's talk about the Nasdaq, because there is no need talking about much of the things. So let the market gets heat up, and then we will see what's happening, and it will probably happen by next week. We will see much clear picture about the trend and the momentum, because right now this I can't rely on this move. That's what at least I can say. I mean, if you want a direct answer, I can't rely on this 7-2% move. Okay, whether it will sustain or not, that's a very big question mark as of now. So if you are looking at Nasdaq is indicating something like this. Nasdaq is indicating something like this. So this is what I can see as far as Nasdaq is concerned. So I mean, if you are looking at Nasdaq, so we have a downside support which is in between 9,600 and 9,800, and on the upside we have 11,000 and 10,800. So this is what we can clearly see. And as far as the swing is concerned, this is the upswing, this is the downswing, this is the upswing, and then this is the downswing. If there is a breakout like this, then the trend will change, but there is no clear sign as far as the breakout is concerned. So stay within the range, okay, and keep your stop losses. Keep a very strict stop loss. You want to go up, you want to go down, that's your individual decision, but always maintain stop losses, because market is indeed very, very volatile on both the sides. So don't take unnecessary risk. That is very important to understand. Now uh, the financial instrument, which is clearly giving some very good indication, and I've been talking about this for the last couple of months rather, is gold. And I've been saying that 1600, 1680 is indeed the level that one must look out to accumulate, because gold future has been going up and down, and you can clearly see the price movement. And if I mean, I have already talked about the long term trend, but even for short term, what we gonna see is a range bound price action, and that is very positive, because what you gonna do, you just trade the edges. I mean, if gold falls in between 1650 and 1700, then that will be the level to accumulate. And on the upside, you have two specific targets. We have 1924 and the big swing towards $2,000 or $2,100. So this is something which we are going to look at as far as the levels are concerned. So on the upside, we have 1880 and 1924, and then we will move towards 2000 and 2100. And on the downside, you have 1660, 1670. Okay. So this is something which we are going to look at as far as gold is concerned, and that's why gold is giving much better indication if you are looking at this particular instrument. And if there is anything else, yes, we do have, because there is nothing to talk about. There is nothing more to talk about. So let's talk about the US dollar indices, and let's go and see what's happened, because there is a sharp fall that has happened in the US dollar index, but it is not down yet. I mean, it is not out yet. It is down, but not at all out yet. So what I am looking here, as far as Dow Jones is, as far as dollar index is concerned, is this specific range. Okay, so if you are looking at this very tiny range, what we're gonna have here is 103.58, and we have 103.4 as far as the support or stop loss is concerned. So try not to go below 103, because if dollar index falls below 103, you will see sharp downside in the dollar index, and simultaneously a big upside as far as the dollar price stock indices are concerned. So the range in the dollar index is in between 103.4 and 103.6 on the downside, and we have 104.6 and 105 on the upside. Or basically, or if you want to stretch this a bit, you may stretch it up, and the levels that we are going to look at, so here we are 105.7. so this is the range, or this is the level that we are looking at on the upside. So overall, the market looks good, but it is trading in between a range, so don't be very optimistic or pessimistic, just observe the range. And I mean, gold is looking good. Gold is outrightly, it is it is at the top when you're talking about the upside, or when you're talking about the trend. And as far as other things are concerned, let the market stabilize and then take your decisions accordingly. So this is the end of the video. Thanks for watching.